What is going on, traders? In this video, I will be showing you a way of defining whether you're going to be taking longs or shorts with ICT. A lot of people are actually struggling with getting to a daily bias. And in this method, you do not actually need a daily bias to take trades. I'll be showing you a version for the London session, and I will also be covering a way of defining whether you should be taking longs or shorts for the New York session. So let's actually use today as an example. So as we can see, we are now in the London lunch session, and let's actually take a look. So for this method, what you will need to note is the following. You will need to write down the midnight opening. All right, so that's what we're going to be taking into account. And then for New York, you're going to be taking into account the 7:30 opening of the New York session. Or Forex, of course. If you are looking to trade this in futures, you will have to be looking at the 8:30 opening and see what that gives you, but I'll go into more details for that in just a second. So the first thing we will be doing is actually taking note of the midnight opening. And as we can see, that's going to be this candle right here. Let me quickly zoom in for you guys. Currently only 1 minute. There we go. The opening would be right here. And basically how we would look at this is that everything above this level is going to be you looking for shorts, and everything below it is going to be you actually looking for longs. Simple as that. So this is going to be your equilibrium. And what do we see? What do we have above here? We have some liquidity resting right here from the Asian session. So let's actually mark that out. You can immediately see that we actually violate that and we sweep that within the London session. We have a first initial sweep right here, but we do not see a market structure shift. Then when we look further, we do actually have a market structure shift at this point right here. So let's mark that out. And once we get that market structure shift, we get multiple fair value gaps. One is actually already tapped into, so we can actually refine it a little bit. This is going to be our first fair value gap. And then we, of course, have a second fair value gap. And then as you can see, since we are above the equilibrium with the fair value gaps, we can actually set shorts right here. So that's what we're going to be doing. We're going to place a short. You can actually place it on the equilibrium. I would just place it on the beginning of the fair value gap. And then what I would cover is going to be the top right here. And as for my target, I will be targeting the nearest fruit. And as we can see, we actually have a winning trade for 3.35R pretty swiftly and quickly. So that's pretty nice. And when you look at this equilibrium level, don't look at it too much. As you can see, we swept something above the equilibrium. So at that point, we should be looking for shorts. And if we sweep something below the equilibrium, we should be looking for longs. Now, the best way of actually using this method and having this working into your advantage is to only take one trade per session. So this would mean that for one pair, you're going to be taking one trade in the London session and one trade in New York session. This will avoid when you actually have your bias wrong. This will avoid that you actually take multiple trades into the wrong direction. So this method is going to be working quite often. And I will now cover a New York session example. So let's go. All right, so when it comes to the New York session, we are going to take the following times into account. So for Forex, we are going to be looking at the 7:30 candle opening as our reference point, as our equilibrium point. And for futures, we're going to be looking at our 8:30 candle opening point as our reference point. Everything below it is going to be discount. Everything above it is going to be premium. It's as simple as that. So for example, right here, let's actually look at the 7:30 opening. And the reason we are using the 7:30 opening in Forex is because we know that at 8:30, all of the momentum is going to be kicking in. But of course, starting from 7, our kill zone actually starts. And that's when we can start looking for our setups. So right here, we have our equilibrium point, and we know that below that we can be looking for longs, and above that we can be looking for shorts. If we actually zoom out a little bit, and I'm going to do this on the 1 minute, what we can see is that during the London lunch, we actually took out all of the Asian lows right here, which was a bunch of liquidity. So we can expect that this low is likely going to be protected, and we can anticipate price probably not coming back to that point. If we also take a look, we had price right here actually react to a fair value gap. Let's mark that out. So we reacted to this fair value gap, as you can see. Now what we're going to do is we're going to use that refined fair value gap to actually take our entry. So where do we set our entry? We set it right here at the beginning of the fair value gap. We covered the low of that swing that we created, and then we can target the next bit of liquidity. We can either target these highs, but I would be interested in these highs mainly because I think price is going to shoot up. Mainly what I do is I go to the 15-minute to actually look for an interesting point and let price run, especially if I think price is going to move in my direction. So let's say we could target something like this, 7.2R. And as you can see, that is a winning trade. Now, this is a really, really simple strategy, a really simple way of actually defining whether you should be looking for longs and shorts. And if you want to actually know the theory about this, you can learn more about that when you look at AMD, or the power of three: accumulation, manipulation, and distribution. As we know, we usually will have, at the start, we will have a fake out. So we will fake people out and trap people into the wrong direction. And if we define our equilibrium point right here, we can see that we usually have that first swing towards the wrong direction for us to then shoot up. And this is a pattern that you will see occurring in both the New York session and the London session. That was basically it. I hope you found value in this video. If you did, I would appreciate it if you could just leave a like, perhaps a comment and a sub. That would be nice. If you want to learn more about this way of working, or if you're looking for a community, a like-minded community that also trades ICT, feel free to join our Discord. It's completely free. There is a lot of value being provided in there every single day. We have a lot of active members. And also, if you have questions, I'll be more than happy to actually answer them there for you. Thank you for watching. That was this video. Catch you in the next one. Bye-bye.